Can you guys hear me?
Yes, we can hear you.
Yes.
Yeah, how are you guys doing?
Yes, we can. We're good, thank you.
Okay, by way of introduction, I am Unati. I will be taking you guys through the auditing material for test one, or for phase one rather. If you have any questions, please feel free to drop them in the chat either, or actually if you could just unmute yourselves and actually speak, then yeah, I'll gladly assist. I'm also looking forward to, I suppose, virtually meeting you all and giving this class and helping you where you need assistance. I also just need the online team to please give me access to share my screen. I'm not able to do that. I'm not sure if Norma or Libuani are on the call. Okay, maybe while we get the screen sharing sorted, you guys can talk to me about how you feel about auditing, so I can get a feel of where you are and what kind of preps you've been doing to get acquainted with the module. Anyone?
Can you hear me?
Yes, I can. Please go for it.
Personally, I'm not including the example. I can.
So you're breaking up a bit there. I'm not sure if it's only breaking up on my side.
Can you hear me now?
Yes, I can.
I said personally, actually, like particularly for this test one, on my experience that I when I try and do activities, I lose unnecessary marks. Basically, the basic knowledge of application. So like the basic principles, I either go for like look for any chaotic error. Let's take for King, like this director did not do any, this particular director does not have a qualification. So I overthink it and then I lose marks. I don't get my basic, I don't write the basic thing that I actually do not aim for my easy marks. Because I think when I reach in my go for a test, or I think like I put myself in an exam time, I always say, okay, fine, let's do it. But I think I overthink the scenario.
Okay, well, that's fair enough. I'm gonna make notes on it. And then what we will do is dive into it. I will take another step back and just give you guys an opportunity to talk to me about what it is, that you are struggling with. So what I think from an auditing perspective, the tools that you'll need is obviously your CTA handbook. You need the CTA handbook. It's important because you can take the CTA handbook in with you when you go and write your test and exams. So sorry, if someone can also just you guys can see the slides.
Yep, we can.
Okay, great. Yeah,
Yes,
so
we
you
can.
either take the handbooks with you when you go to the tests, when you write your exams. So you're going to flag them as you're busy studying. You're going to flag them when you're in class. You're going to flag them when you revise your questions. If you are doing CTA for the first time, I would advise to be, I suppose, diligent about how you flag. Generally, people, when they start CTA and you've got these books that you've got to flag, we get overexcited and you end up highlighting the whole entire book. You don't need to highlight the whole entire book. You also don't need to flag the whole entire book. The book has a table of contents. You can use the table of contents to navigate to where you're going to. So you don't have to flag each chapter. That is a bit excessive. Just flag it in a way that you understand it the best so that you can find what you're looking for when you need to find it. Another really good resource is the auditing notes for South African students. So you'll get the latest edition of that. In there, you will get a more broken down version, detailed on how your standards work and detailed interpretations of those standards. In there, you will also find what is not actually in your handbook, and you won't be able to take that with you. So I suggest those are the things that you study off by heart, but we'll touch on those in one of the other phases. That would be your cycles. So the cycles will be your business processes. So the cycle for revenue, for payments, investments, payroll, etc. Those are in there, and they are very, very detailed. So if you can get your hands on that textbook, it would be highly recommended. Then in terms of an approach, I would suggest that you study your notes in conjunction with the handbook. And then, like I said, you're going to use your handbooks when you're studying. So you'll be highlighting when you're studying, you'll be highlighting things from class. I suppose maybe from class, because again, you want to be concise with how you highlight your books. Maybe in class, make notes of what you would want to highlight, and then later go back and highlight it when you've thought clearly about how you want to reference this and cross-reference it to other sections, which is also going to be very important because integration becomes very important from this level moving forward. So the cross-referencing in your standards is also a key skill to have. When you come to class, when you're watching the on-demand videos, please use your standards as well. And attempt the questions, the tutorials, the things that are in your question packs. Do those thoroughly before you look at the solutions, and then mark yourself. Evaluate yourself honestly against the suggested solution. We call when you're looking at the solution while you're doing the question, we call it the OER approach, because what you do is, as you're busy doing a question, you find that you struggle with something, and then you open the suggested solution. And then as you're reading the suggested solution, you're like, oh yeah, I know this. Yeah, I know this. And then you keep reading the solution and reading the question as well. You're kind of cheating yourself. And then when you get into the exam or in the test and they've asked you the exact same concept or the same principle, you sit there and you're like, oh boy, I don't know how to approach this and I don't know what to do. So in order to avoid that, it's very much recommended that you do your questions thoroughly and mark yourself critically as well when you do that. Then when it comes to auditing as a module, I think the building blocks would be for you to obtain the necessary critical skills, which would be your technical skills. That means that you need to be familiar with the theory. You need to understand the theory. You also need to be able to think practically about the scenarios and look beyond the individual topics that are being presented to you in the classrooms and in the videos that you watch, as well as in your theory, because as much as in your theory it's broken down into individual topics, there still has to be an element of practicality, because once you're able to see it practically, you get a holistic view of auditing and you're able to make it real for yourself. helps you in terms of gaining an understanding. And when you don't understand something, please try by all means to educate yourself, either by engaging with us in the WhatsApp group, by doing research. I still would recommend, after doing your own research, to come back and engage with us in the WhatsApp group, just so that we can clarify certain aspects. That ability is going to help you think practically, and you'll develop the competence of integrated thinking, because once you see auditing as a concept holistically, you start to see where it integrates with other disciplines, as you'll be doing your math, your tax, and your accounting. It's very important, because when it comes to auditing, in any case, you are auditing the tax treatment, you are auditing the accounting treatment. And when it comes to math, from the costing side, you are also auditing the costing when it comes to the valuations and things. Then from a strategy finance perspective, that links in very heavily with governance that we're going to be doing this evening as well. I will also then show you the links of those things. But if you don't understand auditing holistically, you won't be able to see when it is applicable to your other modules, and when it is tested and examined, you will struggle with the integratedness of the topics. Then another thing that you need to do is to practice questions, because this is where you'll be able to put your technical skills to the test. So do questions under exam conditions. If the question is 50 marks, set a timer for yourself and do the question under, I think it would be 1.5 hours, because 40 marks is 1 hour. And then, yeah, so you multiply the mark allocation by 1.5 to see how much time you can spend on the question. When that time is up, then you know that exam, that's actually all you would have been able to write. And that actually helps you to then improve. Once you realize what it was that you struggled with, you can then go back to the theory to work on the areas that need development, because ultimately that's how you're going to develop exam technique, which really is the difference between passing and failing. Right. Tomorrow's tutorial class will be on Parlay Green. I think it's Parlay Green or Paul Green. Please, again, attempt the question thoroughly, mark it. Please give it your best attempt, and then tomorrow I'll go through it, showing you the thought process and the approach to extracting information from an integrated scenario and then responding to the tasks separately. Cool. Any questions before we dive in? I also can't see hands, so if there is a question, please just unmute yourself and go for it.
Hello, ma'am.
Hi, please don't call me ma'am, call me by my name.
Sorry. Hi, how are you doing?
I'm good, thanks. How are you?
I'm good, thank you. I just wanted to ask if you can maybe send us the slides in the chat if possible. I like looking and touching. I feel better when I print and actually have them on hand.
Sending them, sorry?
Oh, okay, cool. Thank you.
Okay, I'm assuming you got an answer somewhere.
Oh, sorry. I thought you said you are sending them. I was asking if you could please send the slides to the chat, to the meeting chat, so we can print.
Oh, okay. I'll engage with the online team for that.
Okay, thank you.
Okay. Then, okay. So before we discuss tonight's topics, I just want to give you guys an overview of audit in a nutshell, and then I suppose also explain my approach in these workshops and the content that I will be delivering to you. So since this is not an undergraduate class, I'm not going to go into immense detail on all the lecture content. I mean, you guys have lecture material, so that should be sufficient for you to go through in your own time and stuff. I don't think it would add value for me to sit and read the slides back to you. Instead, what I'll do is then go through the content at a high level, And then I'll zoom in on the specifics that I think are the common areas where I've seen candidates struggle when they've been examined on these areas. And then I'll also try to touch on where to get the easy marks, like somebody said earlier, and also then critically just discussing the exam technique when we go through the content. Auditing is a process. I'm sure you guys are all familiar with the audit process that starts with pre-engagement activities, which is deciding whether or not you're going to take on a client or deciding whether or not you're going to continue with a client that you had previously. From there, you move into planning. Planning, you've got your risk assessment and your audit strategy, things. From there, you then develop your overall strategy and you develop an audit plan. Then you move into your response to risk, which is obtaining the audit evidence. That can be obtained in the form of test of controls or substantive procedures. And then you move into your evaluating, concluding, and reporting phase, where you evaluate the work that you've performed, you conclude on it, and then you form an opinion so that you can report then on your findings. What you'll see then on the left-hand side is the Code of Professional Conduct, King 4, the Auditing Professions Act, and the Companies Act. Those lie on the side because these are considerations that are there throughout the whole entire audit process. And that's the focus of tonight's class. We'll be going through the content that lies on the left-hand side. It forms part of the overall process because in any phase of the audit process, be it pre-engagement planning, obtaining evidence, or evaluating and concluding, you need to consistently consider compliance, non-compliance, appropriateness, inappropriateness in line with these concepts. That's why I said as well, you can't look at the topics in isolation, but you need to look at them from an integrated perspective. Because again, while you are obtaining audit evidence after you've developed your audit plan, you might need to audit certain things that are in line with the Companies Act, and then you need to go back and make reference to that. Or while you're doing that, your findings might present that there has been non-compliance either with the Companies Act or with King or with the Code of Professional Conduct. So from a Code of Professional Conduct, that perspective, that would be the framework that governs ethics and the conduct of CAs, both in business and in practice. And then there's an IRBA code that forms part of the SAICA CPC, which is specifically for registered auditors. So that is for RAs only. Then the APA is the legal framework, which is the Audit Professions Act, that governs the specific parts of the audit and the specific requirements for auditors, and that is applicable to auditors only. You've got your Companies Act, which is the legal framework that governs all companies and specific sections that especially impact auditors, but it is mainly for companies only. Then you've got King 4, which is the governance framework, which should always be kept in mind. That should be kept in mind throughout your CTA studies, because that governance element links very heavily back into strategy on your math side, because business is driven by strategy, and putting the strategy into the business is the role of the board of directors. And from that perspective, the governance becomes very important in how they govern the business in trying to implement the strategy. Then, cool. So then for today's roadmap, like I said, we'll be speaking about the things that were on the left-hand side. So we're going to discuss ethics, we'll discuss governance, we'll take a little bit of a comfort break, and then we'll go into the statutory, and then towards the end there we'll be looking at fraud. So under ethics, we'll cover general ethics as well as the CPC. I do it like that because it's also how questions are framed. A question can ask you to please discuss any ethical concerns, and then you would be required to discuss both general ethics as well as the CPC. Under governance, we'll be speaking more of keen for, but that's where governance also would link into strategy, is what I've been saying previously. Then what we'll do is that we will take a comfort break. You guys can stretch your legs, fill your water bottles, make coffee, tea, whatever you need to do. And then we'll come back and we'll look at the statutory, which will be the Auditing Professions Act and the Companies Act, which again, if a question says to you, discuss any statutory concerns, then those are the things that you're looking at. And then we'll take a look at fraud, which is also an all-encompassing area, because you need to look at it throughout the entire audit process. So that's what I have planned for you guys this evening. Are there any other specific things that you would like me to discuss under those areas? Alternatively, you can also stop me if you have questions. So I won't be able to see hands like I've said previously. I also can't see what's in the chat. So if you have a question or a comment, please feel free to unmute yourself and then just go for it. Cool. So we're diving into ethics, and ethics is broken up into personal ethics, business ethics, and professional ethics. But from a personal ethics perspective, we talk about one's individual values. So maybe you guys can tell me, when you start to think about ethics, what comes to mind?
Good evening, everyone.
Hello.
Hello.
Yes, you can go for it.
Ethics, I think it's about doing good for yourself and also doing good for the others, or do to others as you like it or what you are doing to be done to you.
Okay, that's fair enough. Good for self, good for others, as well as doing unto others as what you would want them to do unto you. Anybody else?
Hi, everyone. From my side, ethics is about doing right when no one is watching you.
Ah, okay. Doing the right thing when no one is watching you. That one also falls under integrity. Doing the right thing. I like that one. Anybody else?
I'd say being honest in everything that you do, right? So if you're processing a transaction into accounting books and you know you don't understand, don't do it, because just be honest, go seek help before you can pass that thing. So for me, just being ethical, tembera, to be trustworthy.
Yeah, those are really good points in terms of ethics. What all of you guys have raised. I think it also just brings it back down to the core part of ethics, being that ethics is really just about our value system, our belief system. And I mean, for each person that can be different, right? To say doing the right thing when no one is watching you, what is the right thing for me might not be the right thing for you given circumstances, right?
No.
So
we can have different circumstances. I could be broke right now, right?
Yeah.
But doesn't mean because I have access to your company's bank account, I must then do something because of my circumstances. Even whatever circumstances, you need to do the right thing, which is ethical. Just be honest and have trustworthy in the integrity when no one is watching you, despite your circumstance of being broke.
Yeah, that's absolutely correct. But do you agree with me that the right thing to do can be subjective?
Can be subjective.
Yeah. So, I mean, the right thing for me is not necessarily the right thing for you. So again, let's take the example of being broke. If somebody is broke and you give them $100, they take the 100 Rand and they go and buy food versus giving the 100 Rand to a different person who's not broke, but you've given them 100 Rand. To them, that 100 Rand is actually extra money, and they take that money and they go and buy, I don't know,
Alcohol.
buy a movie ticket. I mean,
Okay.
is it wrong what the person has done with the movie ticket? It's not like they didn't have food. They had food, but you've given them an additional 100 Rand. But with the other person who doesn't have food, the right thing to do is to buy food, right?
Yeah.
Yeah. So they've done something different, but to each of them, it is the
It was
right
the right thing to do. Okay.
Yes. So that's where that concept of good for self and good for others comes in, because sometimes what is good for myself is not necessarily good for other people as well. And so you need to always measure your own subjectivity against somebody else.
Mm.
So that's personal ethics.
Okay.
And again, like I said, personal ethics is linked to our values, our beliefs, and our attitudes. Our values and beliefs and our attitudes are things that are core values that are brought into us when we are children and growing up, based on our experiences, based on our culture, social standing. That's why everybody's value system is different. The value system of a rich person is not the same as the value system of a poor person. Some rich people don't have an issue with throwing food away. Other people do have an issue with throwing food away. And that's why, again, for a rich person, yes, it might be good for myself to throw the food away, but is it good for others? Maybe I could have given the food to somebody else. And so that's where, you know, and that's the whole concept of ethics, trying to balance your values, your beliefs, and your attitudes against your core system, while also considering the impact of your actions on other people. Does that make sense?
Yeah, got it.
Cool. Then yeah. Was somebody saying something? Okay, then we venture into business and professional ethics. So, I mean, we spoke about personal ethics. Somebody spoke as well about access to a company bank account and things like that. I suppose when it comes to business ethics and professional ethics, you have a guidance system. In a company, you have a policy, you have practices, you have rules and regulations that you're supposed to abide by, and that is supposed to lead you in terms of what should be ethical. And then you also have professional ethics, which comes from our professional standing. So if you register with SAICA, either as an AGA, as a CA, if you're registered with IRBA as an RA, there's a level of professionalism that is required from you. And so there's a code of conduct that governs that sort of conduct. And that would be what determines your professional ethics. What you would do from a professional ethics and business ethics perspective is also not necessarily the same as what you would do from a personal ethics perspective. For example, you might work at Eskom. Eskom is a power producing unit, and they've got very high CO2 emissions. From a business perspective, that is their business model, to produce electricity, and those emissions are part of the business. But maybe you are a green person and you disagree with the impact that those emissions have on the environment. So from a personal ethics perspective, your ethics can conflict with your business ethics, as well as maybe from a professional ethics part. So do you guys see where the balancing comes in?
Yes.
Cool. So from that standpoint, whereas with personal ethics, we thought good for self, good for others, and we were balancing ourselves against other people. From a business ethics and professional ethics perspective, what you need to balance yourself against would be stakeholders, the interests of diversity, any impact on business decisions, your branding, business etiquette, and whatever would be in the public interest. And when you talk then from a business ethics and professional ethics perspective about good for self and good for others, these would be the others that you would need to consider, right? Then I spoke a little bit about the conflict between personal ethics and business ethics, and I mean that is then where you have an ethical dilemma, right? So if you've got an ethical dilemma, it's when you've got a bit of a conflict. Sorry, please just excuse me for 2 seconds. So when you've got a conflict, either between your personal ethics, your professional ethics, or your business ethics, then you sit with an ethical dilemma. But what's important is to always try and behave ethically, which is acting in a way that is consistent with your values and the commonly held values of the organization and then society at large. So that would be how you navigate ethical dilemmas. Then again, the principle of good for self, good for others is always going to come up when you discuss ethics. There's no way that you can discuss ethics without discussing good for self and good for others. So it is the golden rule. Somebody said as well earlier, doing unto others what you would want them to do unto you. And not only doing what is good for self, but also what is good for those who are around you. And then also taking into account what could be bad for yourself and also bad for other people. So it's not always just about, I mean, a lot of the time we look at it from a selfish perspective to say that the person who's perpetrating the thing is doing something that's good for themselves. Sometimes they could actually even be doing something that is bad for themselves and bad for others. Or the other way around, something that is bad for yourself, but good for others. So there's the balancing act that needs to constantly be taking place. In terms of ethical decision making, you would need to first define your dilemma, like what we did earlier. I'm working at Eskom. They are a power producing business and they've got very high carbon dioxide emissions. And that for me is conflict with personal ethics. Then you need to find decision-making resources. I mean, in that case, you can think about potentially going greener, doing something to combat that impact. Maybe in other ways, Eskom can try to reduce their carbon footprint, even though in the generation part, they're not able to do that. So maybe they can go paperless, they can I don't know, go more virtual so people don't have to drive, and then you can reduce those kind of indirect emissions from the environment. But you're counteracting and you're making you're engaging in decision making in trying to resolve your ethical dilemma. Yes, someone is unmuted. Was there a question? Okay, and then these kinds of decisions also link back to strategy, right? Because I mean, whatever it is that you're doing, whatever decisions that you're making, they have to be in line with the overall business strategy. Then you would identify solution options, see how you can do it, evaluate those options, then make the decision at the end of the day, implement the decision and evaluate the decision. And evaluating the decision is an ongoing process because after implementation, you've always got to make sure, has my ethical dilemma been resolved? Are there any other factors that could pop up that would later bring up a different ethical dilemma or the very same dilemma? Cool. Any questions on ethics before we move to the Code of Professional Conduct? Okay. So moving into the Code of Professional Conduct, this one is part of your handbooks. So very important when you are studying and going through your work to keep this handbook with you so that you can flag it. Does everybody know where to find it in the handbook?
Yes.
Okay, great, cool. Then we go into the Objectives. So the objective would be for you to be able to identify, discuss, and apply the principles that are contained in the CPC, as well as the bylaws and the URBA Code of Professional Conduct, where it specifically applies to URBA, given a specific scenario. So in every scenario that you get, you need to be able to identify what has been done wrong, what was not done at all, which can sometimes be difficult to identify, which is why you have to have a thorough understanding of how things should be done, so that if it hasn't been done at all, you can pick it up. And then recommend ways to correct the situation. From a CPC perspective, I have seen a lot of candidates struggle with exam technique. So what I want to do is to go through the approach in terms of how to respond to CPC questions. Before I do that, does anybody want to share their approach with me? No one. Okay, you guys are a bit shy. Cool. I'll go in. So you need to first figure out, is the CPC or the URBA code applicable? Just because they say you should discuss your concerns in terms of the Code of Professional Conduct, it's not always to say that everybody in the scenario is being bound by the CPC. So you need to determine the context of your scenario. Is your scenario dealing with a CA? And is that CA in public practice or a CA in business? Do you guys know the difference between a CA in public practice and a CA in business?
Yes.
Do you want to tell me?
Okay, a CA in public practice is a CA who might be working for an audit firm, basically engaging in assurance engagements. But a CA in business might be an employee of an organization, or a contractor, or yeah.
What about a CA who has their own business and produces financial statements for companies?
They are in business.
Not in public practice.
Oh, okay, I'm not sure about that one.
Yeah, you see. So if you are in business, you're correct. You're an employee, a contractor.
There could be both, but they can't conduct their own assurance. So you could be in public practice, you can prepare financial statements, but you can't review or provide any assurance on those financial statements.
I think a CA can do an independent review.
Of their own work.
No, of financial statements. So I can have a company, right, where I put together financial statements for other people. And as part of that, I can also review financial statements that have been internally prepared by my other clients who are also companies but have their own in-house accountants. And I can sign off an independent review.
I think it will depend on the context of the scenario. So if you will be
what I'm trying to establish is that you need to know the context in which your CA in the scenario is,
yes,
in order for you to know which part of the CPC needs to be applicable.
yes.
Okay, is everybody on the same page? Does everybody know what a CA in public practice is and what a CA in business is?
Yes, we do.
Okay.
Please enlighten us.
Oh, okay. Thank you, everyone. Okay, so a CA in public practice is somebody who places professional service to the public, right, for reward. That means you are producing work that is going outside of your organization and you're going to get paid for it by the person that you are producing the work for. So it could be a CA who is performing independent reviews, a CA that is doing bookkeeping services, a CA that prepares financial services, financial statements for companies, etc. Because you're doing that for the public, right? When you're in business, you're working internally in an organization. You're an employee. You could also be a contractor in the business, and the information that you're producing is being used within the business. The work you're doing, does that make sense?
Sorry. So by public practice, you mean maybe the users of financial statements? That is,
yes, you have work that you produce for users, or for users that are outside of your own business. So if you work like what one of your colleagues said now, correctly so, if you work at an audit firm, you're producing work that is going outside, and you're being paid for it by the client. But if you work at, I don't know, a name of a company, if you work at Pick n Pay and you're an accountant at Pick n Pay, you're an accountant in business, because you're performing work that is going to be used internally in the business.
Okay, now that makes sense.
I'm glad.
Sorry, Nati. So if I am an accountant at that firm that's listed on the JSE, so I'm preparing apps that will be listed on the JSE. Am I business or public?
No, you're in business, because
I'm
you're not being paid. You know, who's paying you to produce that work?
My company.
Yeah, you're being paid
Okay.
internally. Yeah.
Okay.
Remember, I said you're being paid by a client if you're producing work for the public.
In public. Okay.
Yeah.
Got you. Thank you.
So if you work for a JSE listed company, it's just like if you work at Pick n Pay, you are a CA.
Yes. Okay.
Yes. Cool. Then the CPC is all about the fundamental principles. If you don't know the fundamental principles, you will never understand the CPC. I am hoping that at this point, everybody knows the fundamental principles, and can tell me what each principle means. Integrity. Who wants to give it a go?
Well, we did say integrities weren't doing the right thing when no one is looking.
That is correct, but do you know the textbook definition for integrity according to the CPC?
Oh no. I have the textbook here.
Do you? You can read it. It's fine. You can read it, because once you read it, you then realize that you probably didn't know it. So,
integrity is to be straightforward and honest in all professional and business relationships.
perfect. So if you are reading in a scenario and you see that a CA is not being straightforward, they are maybe bending the truth, or they are outright lying in a professional relationship, then they are not being a CA acting with integrity, right?
Yep.
Also,
Yes.
in terms of working with reports, giving annual returns, any communications, if you are putting together information that could be materially misleading or could be false, or you're omitting information, that's not being straightforward, it's not being honest. So it's lacking in integrity. Objectivity.
I think being objective is making sure that you do not allow undue influence, conflict of interest, and bias to influence your behavior.
Correct. Or your professional judgment, right? Also, you shouldn't perform services for people if there is, any undue influence, or if you are not objective in a situation. And then professional competence and due care.
There, I'd say just to apply the right skills right, and knowledge of, well, to the client that you are providing those services to.
Yeah, so I mean, making sure that you have the correct level of competence. So
Yeah.
you've got to display professional knowledge. You've got to display your technical skills.
Mm-hmm.
You've got to be considered competent. You've also
Yeah.
got to keep up to date with your legislation as the legislation changes, when the tax legislation is changing, when auditing legislation changes. You need to be up to date with that. When the IFRS standards are changing, you need to be up to date with that. Any laws that affect you in your business and your clients, you need to be up to date with that. So you have a responsibility to ensure that even those who are working underneath you are working with professional competence in due care. So that would also entail coaching, training, etc. So again, in a scenario, if you see a CA in a senior position that is not training those who are underneath them, they're lacking professional competence in due care. Somebody who's not keeping up with their CPD, lacking professional competence in due care. If you come across a CA in a scenario who doesn't know how to apply a certain standard, it means that they're not keeping up to date with the changes in the standards, right?
So if I have a manager that has knowledge, being in a company for 20 years, but she's withholding the pearls of wisdom, with that professional competence in due care.
Yeah, because you're not bringing down that knowledge and that competence. Part of being a professional is also to make sure that those who work underneath you are also professionally competent, because that ensures that the whole entire product that you produce is competent. Because think about it from an auditing perspective. If you've got an audit manager and they've got trainees, and the audit manager doesn't teach those trainees, the work that is produced by those trainees will be of a substandard quality. And at the end of the day, the audit manager and the audit partner need to give the okay for this to go out to the client. You can't send to the client work that is of poor quality, work that is not up to date with the standards, not up to date with legislation.
Cool.
Yes.
Sorry, Unati.
Mm-hmm.
So you see, let me try and make this silly example. Okay? How do I put this? So if, let's say, for instance, let's say I'm an accountant in business. I work for a financial services entity. Let's say I do valuations, right? Of course, in my mind, what I believe in is that I'm competent enough to perform the job, right? And I've got the necessary skills to perform the job, right? But upon reviewing, maybe by people who are doing quality assurance at work whatsoever, they then realize that, okay, let me put it this way. So I was saying that if, for instance, you are not doing your CPDs, you are not taking the necessary courses that are going to make you competent, viewed as competent, then that could be an indication that you are not professional, you are not adhering to the professional competency in duty.
Yes.
I'm asking this because I think Ms. Queen Anna mentioned something around having not read the contract, thought that they were signing just the terms and conditions.
Yeah.
Does that make you not competent enough? Because I'm not sure if you get where I'm coming from with this.
It doesn't speak to competence, but it speaks to due care. It was negligent. You know, she didn't take the time and the effort necessary to understand the implications of what she was doing. And so it was actually both a contravention of her professional competence and due care, as well as her professional behavior, because those actions ended up bringing the profession into disrepute.
Okay. I see. Thank you.
You're welcome. Yeah, these things don't work only in isolation. You can find a contravention of integrity and a contravention of objectivity together. You know, they don't work in isolation. Like I said, don't look at these things as individual concepts. Look at them holistically. And again, when we talk professional competence, we're not only talking professional competence, remember, it's professional competence and due care.
Unati, how are you?
Good, and you?
I'm good, thanks. Still on the professional competence in due care, for interest sake, yeah. So if we're gonna be having it as a fundamental principle within your question, what threat will be towards that? I mean, what threat will cause this?
Well, in Ms. Kunana's case, it was a self-interest threat.
Okay, so are we saying that the threat will be towards the CA, and then the professional competence and or the cost of not being professional competent will be due to maybe not training the staff in the context of training staff and other things?
So remember, you'll have, and we'll get into that a little bit later, you'll have an issue, and then from the issue, you need to identify what the threat is and to which fundamental principle that threat lies.
Okay. I'm not sure if I follow, but maybe when we do the questions, I'll understand more.
Okay, cool. Confidentiality.
So there, basically, I can't be sitting around in the coffee shop discussing my employer's. I'm saying with confidentiality is basically means that I can't be sitting around at a coffee shop in a public space and discussing confidential information relating to my employer.
That is true. That is true. It's one aspect of confidentiality. What about if you are an auditor and you get called before a judge and you've got to answer some questions, and some of those questions end up with you discussing client information?
I think that's allowed.
To just discuss? And what about obtaining permission from your client?
Yeah, you also have to obtain the permission.
And if the client says no?
Sorry?
And if the client says no?
Says no.
I think needs to be done with
I
the
think if the
compliance of the
client
rule.
says no, you don't have to say anything.
I believe it's like
the
a
law
limitation.
supersede.
Unati, will we not be? Of course, I doubt if we would have to obtain permission if it's required by law. But I think what we can do is to make aware the client that this is what has been required. Because I mean, if the judge calls you, and that's it. And in an event that you refuse not to come, is it not contempt of court? Are you not creating issues for yourself?
Well, you can go, but when you get there, you don't necessarily have to answer. It is important. You must obtain your client's what do you call this, approval. Your client must authorize it. If your client doesn't authorize it, and you explain to the magistrate that the client has not authorized it, there are other channels, remember, because these codes of professional conduct bind you according to the professional body. So in such cases, the CA would be expected to approach SAICA and explain what's going on. And then from there, they would find a way to deal with it. You can't just discuss. Remember, you've signed a contract with your client that you will keep their information confidential.
Yes, because you will end up breaching the contract.
Yes, and that again is its own legal implications.
And now the client can sue you now.
Yeah. you see where it becomes messy. So you just step back and look at the options that are available to you. It's always important as a CA to take a step back. And these kind of discussions become very important at an APC level, because there you need to start advising when there's actual issues in the case study to say, look, but if we do this, then this is, the implication. Perhaps we should consider doing that.
Cool.
Yeah, so
Thank you.
Just because you've been subpoenaed does not mean that you have to disclose. You still need permission from your client, because again, you've signed a contract with your client.
Sorry, Unati, shouldn't the regulatory body be the one that deals with these issues? Because if you're an accountant, whether in public or private, you have a duty to report any irregularity to the regulatory body and then do those reports to them, and then they now would need to deal with the law enforcement.
That is 100% correct. Okay. Everybody clear on confidentiality?
Happy?
Cool. Professional
Hi,
behavior.
sorry.
Yes.
Yes, maybe just to ask while we're still on confidentiality, if it happens that I disclose maybe the information of the client, maybe in the same scenario that I'm in court, I'm required to disclose information. Are we saying that these fundamental principles are binding to the accountant, and then in the same way as the Companies Act, or are we saying these are recommendations the same way as King is? Not sure if you get my question.
Yeah, this is not a recommendation. This is your code of how to conduct yourself as a CA. This is how a CA should conduct themselves. Should you not conduct yourself in this manner, SAICA can reject you as a CA. And then you will no longer, you can be an accountant, you can go and be a bookkeeper, go and do whatever, but you cannot be a CA if you do not abide by the code of conduct for CAs.
Oh, okay. Okay, thank you.
Yeah.
Sorry, can I also ask something?
Yes.
On the on confidentiality, on the point number D, where it says that not disclose confidential information acquired as a result of professional and business relationship outside the firm or employing organization without proper and specific authority. So there's where it says unless there is a legal or professional duty or right to disclose.
Not prohibited by law.
Okay.
So they're discussing where you have a NOCLA. If you have a NOCLA, so they are under specific circumstances where you must disclose. So this is similar to doctor-patient confidentiality, where even if a therapist gets called into court and they need to testify, they cannot testify about the therapy sessions that they had with the client unless the client actually gives permission for them to do so. Even if the client is dead, the therapist is still not allowed to do it. It still falls under doctor-patient confidentiality. The only case where a doctor is allowed to break confidentiality has been specified by law. If they suspect there is child abuse, if they suspect that a patient might harm themselves, etc., or they suspect that a patient might harm another person. So if you're a therapist and you're sitting in a therapy session and your patient starts talking about how they want to kill someone, then the therapist is mandated by law. There is a professional duty there to disclose. So again, if you are you've reported all of these irregularities to IRBA, and then IRBA says, okay, well, you're going to go to court, you must now disclose this thing. You have a professional duty to disclose.
Okay, thank you.
So just on that, Nati, so if I'm getting you right, you are in fact saying that as a chartered accountant, you are sort of required to first report to the professional body, then you sort of sought permission in circumstances where you have to report something, where then the professional body will then give you a go ahead of whether or not you can disclose or not.
That is
despite
correct.
the client.
Okay. Remember, if you have an RI says that the auditor must immediately report to the regulator. So you go to the regulator. If you suspect that there's an RI, you go to the regulator and you give them details of that. That is already a breach of confidentiality, but it's a breach of confidentiality where there was a professional duty to do so.
Okay. Okay. I see. Does
that make sense? Okay. Professional behavior.
I think you mentioned it earlier, Nonkululeko, where you said that it's behaving in a way that doesn't bring the profession in to distribute.
So professional behavior for me, it's not a technically correct theory, but I like to think of it as when you are not you know, keeping up with your CPD and being professionally competent when you are not reading contracts thoroughly before advising clients and signing things, so not doing with due care, if you're not keeping to your confidentiality unless, you know, mandated by professional duty, etc. All of those things make people look at CAs in a bad light. And so technically a breach of all of those principles can be a breach in your professional behavior, because from your professional behavior, you are required to comply with all the relevant laws and regulations. You can only do that if you maintain your professional competence in due care. You're also required to, you know, again, not make exaggerated claims, unsubstantiated comparisons with work of others, etc. Otherwise, people are going to be like, yeah, that's CA who thinks they know everything, but they actually know nothing, you know? And some of that also speaks to integrity, because if you're not going to speak truthfully, if you're going to give information that is false and misleading, it also brings the profession into disrepute, and people will say, oh, CAs are liars. Cool. So professional behavior is a broad thing. It's not one or two things. It's the way in which a person conducts themselves that would also make other people see all CAs as that same thing.
Can I ask?
Yes, you can always ask.
Yeah. So are you implying that if there's any threat that compromises any of the other 4 fundamental principles, you might as well always add the professional behavior as an extra mark?
You can't do that, because I don't think examiners are that friendly with marks. But when you're discussing robustly, I suppose in an APC setting where you're not being marked based on the number of marks that you're writing down, that is a valid consideration. But I like to think about it like that, to sort of broadly bring everything together.
Okay, thank you.
Okay, Nati. For example, if you're on Twitter, bragging about what you have as a CA, the cars, the clothes, whatever, is that fall under professional behavior? Is that allowed?
If you have your CA designation on your social media account, it can be considered, especially the way in which you respond to people's comments on that post. So I don't think the post itself, you know, yeah, I mean, people post their cars and things. I don't think the post itself, but I think it's more the context of the post and your attitude in the post and the tone of your post, as well as your response in the comments.
Thank you.
A lot of people have actually been brought under review at CICA and faced disciplinary action because of their social media posts. So you guys must be careful. Cool. Then we have these fundamental principles, but now we've also got the threats to those fundamental principles. We've got a self-interest threat, a self-review threat, an advocacy threat, familiarity threat, as well as an intimidation threat. Is everybody happy that they know the different threats and what they mean?
I think
Unati, I tend to struggle a bit with advocacy. So can you just take us through that one in application? And also self-interest for an accountant in business. It's a bit, sketchy for me.
Okay, self-interest for an accountant in business, very easy. Like what one of your colleagues mentioned previously, I've got access to a bank account. I can actually falsify transactions that I can send to my mom. That is me acting on a financial interest, and it is compromising my professional behavior. It's also compromising my professional competence in due care. I think it also compromises my integrity. That's in business. Does that help?
Okay, no, thank you. Thank you.
Okay, and then advocacy.
I think I'm confusing it with conflict of interest, not actually, self-interest,
Oh, okay.
Yeah.
We'll get to conflicts of interest, but conflict of interest is not necessarily a self-interest threat, but having a conflict of interest can be a self-interest threat. Do you want me to explain that part?
Yeah, no, when we get to conflict, just how when you are inside, when you are actually employed as an accountant, how that conflict of interest arises. Because I understand if you're in public, it's a bit easier because you could be, you could get bribed or something like that, that could actually influence your professional judgment. But when you're inside the company, how does that now, how do you have conflicting, views within the organization?
It's like me. I'm a green freak. I personally, my values are that we should, reduce carbon emissions. And then at Eskom, I'm working at a power producing unit. I don't really work at Eskom, guys. Yeah, I'm just making an example. There's a power producing unit, and they've got these high CO2 emissions, and that conflicts with, my personal interest. And so now I'm sitting in a board meeting, and they're discussing I don't know, carbon footprints and our environmental impact. And I keep telling them, actually, we need to stop producing, using the way that we're producing. We need to go completely solar. And I'm pushing that agenda without thinking about the impact on the client, on the business as a whole. I'm doing that because it's in my own interest that my personal values are highlighted above the organization's needs. Because again, if they were to switch off all of the coal power stations today and start with solar tomorrow, where they're going to get the money to do that? So I'm not even thinking about the practicalities of it from a business perspective. I'm only thinking about myself and what I want. That is self-interest.
So basically pushing your own agenda in simple terms.
Yes.
Without considering the impact that it will have on others, or the good for self. And okay.
Yes.
Yeah,
You
I
see
think
how
then
general ethics moves into CPC.
All right. Yeah, I think number 3. Yeah.
We say that it's a
Maybe
threat,
just
either a financial interest or any other interest. So any other interest can be just like you put it there, pushing your own agenda, which is going to influence my judgment or my behavior. So under normal circumstances, that's probably not the business advice that I would give, but because it suits me, that's what I'm going to say.
Yeah, makes sense. Thank you.
Okay. Advocacy is to promote a position. So if I'm doing a valuation and perhaps I'm doing a valuation for a client that is about to be purchased, maybe by a client that I am auditing, right? And I keep telling these people, look, this company is actually doing brilliantly. Their share price is going to go through the roof once you acquire them, or whatever the case is. They've got great assets. Their assets are highly valued. They've got a good value. It's a good value for money decision. And I'm doing that only because I was paid by somebody else to do the valuation. Now I'm over-promoting this position to the point where my objectivity is compromised. That's also why you don't see adverts. Have you ever seen an advert for PwC where they say our audit services is the best, better than BDO?
No, actually.
Yeah, you're not allowed to advocate like that. Yeah, so that's part of advocacy.
Thank you.
Okay, cool. Clear on the other threads?
Hello, Nonko. Can you please explain self-review thread? I was having network issues.
Self-review is that, okay, so for example, you text on WhatsApp, right? Yes, no?
Okay. Yes.
When you type up a text and you send it, how often does it happen that sometimes you notice you have a typo in there?
all of the time.
Yeah, because you can't review your own work. You can't find the mistakes that you made. That is self-review. So if I am being asked to look at the work that I've performed, there's always a risk that I'm not going to see the mistakes because I'm the one who performed that work. And that is the threat to self-review. So I will end up putting work out there that is not correct because it hasn't been reviewed by somebody else. You always need a fresh pair of eyes to take a look at something. Otherwise, you won't pick up the mistakes.
Oh, okay, thank you.
Cool. There's also not only just not picking up the mistakes, sometimes you could pick up the mistakes, but you could be too embarrassed to admit that it was a mistake. And then you start to lie to cover it up. For example, if a client is doing the tax, or if you're doing the tax for a client, and then you're also auditing that same client, if you make a mistake on the tax returns, you're not going to turn around when you figure it out in the audit that actually this tax is wrong. Now you must go back to the client and say, look, I made a mistake on your tax return. And then you risk the client telling you that you're incompetent, and then you lose all of that business. You see? So now it's self-review as well as self-interest. Now it's in your best interest to just keep quiet about the fact that you made a mistake so that you can keep your client.
Oh, now I understand it.
Okay, cool. Everybody happy with the threads?
There's a question.
Yes.
Hi, Unati. So I was just wondering, does it happen that, let's say as a firm, we would provide audit services or maybe actuarial services for an entity, as well as advisory, maybe let's say audit for a certain division within that company? Does that not pose as a self-review threat?
It is a self-review threat. It's non-assurance services. But in the case of non-assurance services, if your client is not a public interest entity, there are safeguards that you can put in place to reduce the threat. So for example, if those services that you're performing, which are non-assurance services, are being performed by another division, where there's another partner who's looking at that work, and the work you are performing as the auditor is being performed by yourself, it reduces the risk because it's two separate people that are looking at it.
Okay, thank you.
Cool. Okay, happy with the threads?
Okay.
Okay, so let's look at what the CPC says that a CA should do. It says that a CA shall identify threats to compliance with the fundamental principles. Then it also says that you should evaluate whether a threat is at an acceptable level, and you should address the threats by eliminating them or reducing them to an acceptable level as follows: by eliminating those circumstances, applying safeguards where applicable, or declining or ending that professional activity. I actually like this. It for me is the step-by-step approach that you need to use from an exam technique perspective. There's just one thing missing there, but we'll get to it when we do the question. But this is really important, and if you ever get stuck from an exam technique perspective, I think it's always really good to refer back to what the CPC says that a chartered accountant should do. Okay, then you have different parts of this. Yeah.
Just going back on the evaluating of threats, then I'm not sure if we're still gonna touch them, because I would like to maybe to explain a bit how do you evaluate and decide that this is within an acceptable level. What pointers do you take into consideration?
So in the CPC, it does actually outline circumstances where threats are not at an acceptable level. So as you study the different sections in the CPC, you'll be able to determine under which circumstances. Remember how I said to you, if your client is not a public interest entity and you're providing non-assurance services, then it tells you. But it also tells you that if your client is a public interest service, there is absolutely no safeguard that you can provide, and so the threat can never be at an acceptable level. So the CPC is very specific with that. Remember how I said when it comes to personal ethics and you've got your core value system, and that is what drives your ethics. And then when it comes to business ethics, you have your company's policies and procedures, and that is what guides your business ethics. And then when it comes to professional ethics, you've got a code of conduct, and that is what drives what you need to do. So all the answers are actually in the CPC. It'll even give you examples of what safeguards can be applied in order to reduce those threats to an acceptable level. Cool. Very important that you guys familiarize yourselves with the content of the CPC. Happiness.
Happy. So just for exam technique, so for a studying technique, do you just read the CPC as it is from the standard itself, or do you make notes? Like maybe like the steps that you need to address.
Okay, I'm gonna move to the next slide, and then I'm gonna answer your question. I think it just looks better from the next slide. You see what I've got here? I've got CPC part 2, and then you can see there's section 210, section 220, section 230, section 240, 50, 60, and 70, right?
Okay.
In each of those sections, where there's conflict of interest, it will discuss all the different types of conflicts of interest and how to respond to those conflicts of interest, etc. As you're doing questions, what I would do, if I start to see that there's a typical conflict of interest that likes to pop up, in my standard, I would underline and highlight. And I want to make it clear for myself what the conflict of interest is, if there are any safeguards to be applied, and which safeguards should be applied to reduce that to an acceptable level.
Cool.
And then I wouldn't flag, conflict of interest, preparation of financial statement, because you have an index somewhere in your CPC. It tells you where you can find section 210, right? So you don't need to put a flag there. If you open your index, you'll find it. You can maybe put a flag if you want to cross-reference it. So you want to make a note that this links to another section, that you can do. But I think technically, from my perspective, from a flagging technique perspective, flagging headings of chapters is not an efficient use of your flags. Otherwise, your standard will have so many flags, and in the exam, you spend time navigating the flags more than you do actually navigating the work.
Thank you.
Cool. So I've given you guys the rundown. That is what is in part 2 for CAs in business. Please study these sections and understand them. When it comes to NOCLA, which is also very, very important, you've got responsibilities of all CAs, which is to follow the protocols that exist, and to take those steps on a timely basis. And if you're a senior CA, you've got to obtain an understanding of the matter, address the matter, and determine whether further action is needed. And if you are those charged with governance, so if you are the board of directors or whatever, in terms of NOCLA, your responsibility is to prevent, identify, and address any non-compliances. Happiness. Everybody happy with what they need to go through in part 2 of the CPC, and also that this only relates to CAs who are in business.
So Nonkululeka, hi. With regards to the section 260 with the CAs in business, we'd have to actually look at the scenario and see if we're dealing with a junior, a senior, or the governance, and then only then can we apply what kind of NOCLA they actually fall into, if I could put it like that.
That is absolutely correct. Yeah, you see why I say you need to know contextually. That's why it's important to know if you're dealing with a CA in business, you're dealing with a CA in public practice, or you're dealing with a junior CA, or you're dealing with a senior CA. what is the context of your situation before you can even start to say, this is what I need to do, this is what I'm going to do. You're going to get in there, you start shouting orders of, you need to do this, you need to do that. That time the whole thing is not even applicable to that person. And then you lose all the marks because you're focusing on things that are not applicable to that person, and then you've missed the things that are actually applicable to the CA in your scenario. You must read the scenario. You must really read the scenario for understanding. Cool.
Hi, before you on, I was a little bit sort of like cut off with the network. Can you please explain the NOCLA again for CAs in business? I missed that part.
Okay, so for CAs in business, if you are those charged with governance, so if you are on the board of directors, you are responsible for preventing, identifying, and addressing non-compliance, right?
Mm-hmm.
Then if you are a CA in general, so this is all CAs in business, you need to follow protocols and procedures that exist within the organization and also take those steps in a timely manner. So a lot of companies have like fraud hotlines and things like that. If you identify non-compliance that is a result of those things, you have a duty to report it in the channels that are available to you in the organization. And then again, at large to the relevant professional bodies, depending on what the situation is, in accordance to the rules of NOCLA. Then if you're a senior CA, you need to obtain an understanding of the matter. You need to try to address the matter. And then you also need to determine whether further action would be needed on your part. So whatever it is that you've done, have you addressed that matter sufficiently? So I suppose maybe in that scenario, you could be a senior CA who is in charge of the fraud hotline, and somebody has actually called this fraud hotline and they've made you aware. Now you've got to obtain an understanding of the matter, you've got to address the matter, and then you need to figure out, okay, do I need to do anything more? Do I need to call the police? Do I need, what is it that I need to do now? Do I need to report this to SARS? Do I need to report this to CTA, which is the companies where all companies and things are registered? You need to then determine what further action would be needed from you, and you would need to document all of that. And then again, all those guidelines are in section 260. So you'll be able to find the detail. You'll find the detail there in section 260.
All right, thanks.
Cool. CAs in public practice are then bound by parts 3, parts 4A and parts 4B. Parts 4A and parts 4B speak to independence, but when it comes to part 3, it's really important to be able to link these back to part 1. If you open your index for part 3, you will see that it is very similar to the index for part 1. So when you study part 2, I think you should study part 3 together with it, and then you'll get an understanding, and then you'll see there's only 1 or 2 areas where it's a little bit different. So like for a CA in public practice, you need to consider things like gifts and hospitality. If your client is giving you gifts, what steps do you need to take? What are the implications for those gifts and things like that? Happiness. Cool. Section 300 has examples of threats and safeguards. So if you are struggling to put things together, I would suggest that you look into section 300. And then again, if you're struggling, please engage with us on the chat, and we can see how we can breach that understanding on the WhatsApp group. Cool. Part 3, high level, conflicts of interest.
Sorry, Unati, just to take you a bit back on the previous slide.
Yes.
What do you mean we must be able to link those parts back to part 1?
Okay, so take a look here. You see how section 310 discuss conflicts of interest?
Mm-hmm.
If you move back to section 210, it also discusses conflicts of interest.
Yeah.
That's the link.
So isn't it that the 210, it's just specifically focusing on the CAs in in business, and then the 320, it's in public.
310 is
310.
Yes. And then if you take a look here, it's different. 320 talks about professional appointments because a CA in public practice can be appointed professionally. But in part 2, you don't have that because a CA in business can't be appointed professionally.
Okay.
So you need to look at the link between the two. You also won't see the preparation and presentation of information on the CAs in public practice because
yeah.
they won't. Yes, so you need to link the two because where the sections are the same, the general understanding remains the same. So I think when I say link the two, it's more about trying to make it easier for yourself when you study. Instead of studying those sections in isolation, study them together.
Okay.
Because the content is similar.
Okay, so that you can also be able to like identify what is it that is different about the two.
Correct.
Okay, thank you.
Okay, everybody's happy with conflicts of interest. Here's the example that we had earlier where there's valuation services for both the acquirer and the acquiree in a mergers and acquisition transaction. Also advising two clients at the same time who are competing to acquire the same company, where the advice might be relevant to the parties' competitive position. That would also put you in an advocacy threat because you would be advocating highly on the one side, you know, against your client, and you should never be advocating against your client because that's not acting with professional. That's not professional behavior. Yeah. So you would have an advocacy threat to your professional behavior. Cool. Everybody happy with conflicts of interest?
Yes.
Happy?
Cool. Yeah.
Yes.
Okay. Then 320 talks about professional appointments. That's where you start on client acceptance. Does the acceptance of this client give you any threats to your fundamental principles? That's also important because remember I said that when we look at the audit process, we should never look at it in isolation. So when you're in the pre-engagement activities phase, these are the considerations that you will bring in from a CPC perspective. And you'll see when we do pre-engagement in phase 2, we're going to bring back this part of the CPC when it comes to professional appointments, how you are accepting a client, and then again, are you accepting an engagement? Being, are you then accepting work from the client? And then also looking at changes in professional appointment. So if you are now becoming the new auditor where there were previous auditors, understanding why you are replacing those auditors. Did the client fight with the auditors? And does that potentially impact you? Does that speak to your client's integrity? If so, do you really want to work for someone who doesn't have integrity? Maybe we should just decline the appointment, you know, stuff like that. So this is where that part of the CPC fits in when it comes to pre-engagement activities. So you see how it's a process that you consider throughout the audit, even as you are auditing. If while you're auditing, there's a big newspaper article that comes out that your client was involved in this scandalous thing, there's fraud allegations all around, you need to start asking yourself, do I still want to be associated with this person? You could be towards the end of your audit, and then even there you can decide, look, we are actually withdrawing from this engagement. You see how that thought process is continuous throughout. I hope you can see it.
No, we're following.
Sorry?
I'm saying we're following.
Okay, great. Okay. Yeah, so I'm not sure sometimes. Sometimes for me, silence is not always a good thing. So I mean, if I hear a yes, every now
Sorry,
and again.
Unati.
Yes.
Wouldn't withdrawing be like the last thing that one would do after they've considered everything reasonable? I don't know what degree of reasonability can
that is correct.
be applied in a situation like that.
you need to first look at safeguards and any mitigating factors, because again, a newspaper article is not always necessarily the truth. The journalist could have just written whatever they wanted to write for sensationalism, right?
I 100% agree with that.
Yeah, so the safeguards are there for a reason. I was just making an extreme example. Okay. Then second opinions, which would be in part 3 as well, where you're giving another opinion. You also need to, again, make sure that you're doing it with professional competence and due care. Also, not to stand in an advocacy perspective and be like, you know what, the people at BDO are completely incompetent. If you had actually just come to us in the first place, you would have gotten the right answer type thing. So you need to be careful on how you do that. And the type of communication, sometimes you need to discuss with whoever gave the first opinion, and sort of share information, try to understand their thought process, where were they coming from, what were their considerations, and the CPC gives you all the guidance in order to do that, so that you are not finding yourself with threats to your professional competence and due care. Then when we talk about fees and other types of remuneration, if you've got an audit fee that's too low, the CPC gives you a bit of guidance there. If you've got an audit fee that is too high, the CPC also gives you guidance there. Contingent fees, everybody knows what contingent fees are, right?
Can you please clarify that for me? I'm not sure if I've got the
You are
right
a tax practitioner. If you're a CA and you're a tax practitioner, you're doing work for clients. So I will come to you and I'll say, please help me with my tax return. So I'm going to pay you for that, right? So you're a CA in public practice. Now you say, it's fine, I'll take on your tax returns, but I charge you a flat rate of 4,000 Rand for every tax return. And then I will also take 10% of whatever return that SARS gives you. That contingency element, meaning that the 10% addition is contingent on how much the return is not allowed in the CPC. So if you're a tax practitioner and you are a CA, you are not allowed to charge like that, because it creates a self-interest rate. I will then, or rather you will then, because you are the CA at this point, you will then manipulate tax returns so that I get a return from SARS, so that you can get 10% of that return.
Thank you so much. It makes sense.
Okay, great. Referral fees and commission as well can cause self-interest threats to objectivity, professional competence, and due care. And there as well, they've given you examples of when those situations can occur, as well as what safeguards you would need to put in place. Also, when fees are too high, you'll see when you look in the CPC as well, it will talk about maybe when you take on an engagement and this client is like 90% of your revenue. You're going to do everything you can to keep that client, even if it means, giving a false opinion, because if you lose that client, your business goes under. And so again, you shouldn't put yourself in a position where you will compromise your professional due care and competence, as well as your professional behavior and even your objectivity, just so that you can keep the revenue which is in your self-interest. Okay, then inducements, including gifts and hospitality. So again, if a client takes you out for lunch, yeah, maybe, it's considered trivial, it's inconsequential. I feel like if your client takes you to a restaurant, you're not gonna compromise yourself as a CA just for lunch, right? It needs to be something big, like maybe your client is gonna pay for your daughter's wedding. We had that controversy there where KPMG was attending the wedding there at that dairy farm, I think. That's a big one, because again, you need to be, when you get to part 4, you'll see you need to be independent, and your independence needs to be not only in your mind, just because you are independent and you know that all of those things don't contradict your objectivity, you also need to consider how that appears to the public. So you need to be independent in mind and independent in appearance. If it appears to the public that you could potentially not be independent because of this, then it's a compromising gift. And then there's safeguards and things. But again, like I said, if it's a trivial thing like just going out for lunch, I don't think you would compromise yourself for 100 Rand steak, or I don't know, how much is a steak? 200 Rand.
So
Then,
if I may ask, now that you're a CA and you're part of any audit firm, and then let's say a friend has a company and then they require your services. So now you say that later on they have a wedding and then it's a big public thing because now her company or his company is a big, one of the big companies and is also part of, let's say, your government things. You see, like it goes on and on. Basically, your friend is making it big in the public. So now if you attend the wedding, is that a compromise now with regards to the independence of appearance, I'd say? Because in your mind it wouldn't be,
it appears
but
that you're too familiar with your client. Remember, a wedding is a very personal thing. So it appears that you are too familiar with your client. So you have a familiarity threat perhaps to your objectivity or perhaps to your professional behavior, because that is something that can bring the profession into disrepute. Yeah, I suppose you shouldn't attend the wedding. Or you shouldn't be involved in the work that is going towards your friend.
Oh, yes.
Yeah, so maybe if you're a one-man show and you're the only CA there doing the work, yeah, don't attend the wedding or don't do the work for your friend. But if maybe you run a partnership and you have a partner who can do the work for you and you don't have to do the work, then your partner can do the work and you can still maintain your friendship with your friend.
Okay,
attend weddings and things. Okay, cool. Custody of client assets. I suppose the first thing that comes to mind for me is like with tax. You know how in tax they say you must receive for your own benefit on your own behalf. Sometimes people who are tax practitioners, when they deal with deceased estates, they take custody of their clients' estates. So those things need to be kept separately, you know, from their own business assets and their own personal assets and things like that. I think there's also that tax case law, the Pyatt business, is it, or a biscuit? I think it was a biscuit company or something, but the funds needed to be kept separately. That deposit must be kept separately in a different bank account. Yeah, there are other examples in the CPA, the CPC, but that was the first one that I could think of. Then we move into parts 4 and B, A and B, where we spoke about being independent in mind as well as being independent in appearance. So those, again, like I said, parts 4A and 4B are applicable to CAs in public practice. So the independence part links back also very heavily to objectivity. So you'll see a lot when you're discussing questions or when you're practicing questions, in the solution, it will say that there's a self-interest threat to this person's objectivity / independence. That would be because they are also a CA in public practice and not only a CA in business. Make sense?
Would you please repeat that?
So parts 4A and part B are for CAs who are in public practice. CAs who are in public practice, that would be responsible for independent audit and review engagements, right? As well as for independent assurance engagements other than audit and review engagements. So typically for your auditors. If you are in a scenario and your CA is also an auditor, you'll see as you're practicing questions, it will say that there is a self-interest threat to this person's objectivity / independence. And that is because independence links very closely to being objective. you are more likely to be objective if you are independent from a person. But if there is a level of dependency, then you won't be objective, because telling the truth or whatever would compromise whatever it is that you depend on from that person.
Makes sense. Thank you.
Cool. Okay, so when it comes to independence in section 4A or part 4A, they discuss fees, because you can be dependent on a client because of the fees. You can be dependent on a client from gifts and hospitality. If a client is always, paying for luxurious holidays for you, then I mean, you kind of want those holidays every year. It saves you a few $100,000. Then you don't have to take your family on holiday if your client pays for it. Litigation, loans and guarantees, family and personal relationships, serving as a director or an officer of an audit client. So as an auditor, you're not allowed to be a director of the client that you're auditing. That is a very, very big independence risk. Temporary personal assignments and any long association of personnel, including partner rotation. So that's also where they tried to bring in that mandatory audit firm rotation, but then that got kicked back because the courts were like, no. But I think IRBA might give it another shot. They just need to approach it from a different angle. Cool. So those are the things that are in part 4A. What is also in part 4A is section 600, which talks about the provision of non-audit services to a client, which is what somebody asked previously, if you're doing other services for a client. So if you're doing accounting services, valuation services, tax, internal audit, legal services, or any corporate finance services, the CPC gives you guidance on what you need to do in those cases. And then again, if your company is a public interest company, in most cases, I think if not all cases, it tells you that you're not allowed to do these services. Special purpose financial statements in section 800 you can take a look at, but it's not a very common, it's not a hot topic. In all my years I've actually never seen it in a question. But let me not say never, because I might jinx it and then it appears in a question. Okay, then for public interest entities, like I said, whether you're listed or you are defined by regulation. So in the Companies Act, there's actually a definition for when you are a public interest entity. That is also linked to your PI score, but we'll get to that. Then you must take note that the definition will change in December. So when you finish your CTA and you go and write ITC next year, you could be sitting with a changed definition. I'm not entirely sure on what the changed definition looks like, but just be aware of that. Then section 410 goes into fees, which we discussed. Is there anybody who wasn't clear on the fees? I don't want to go into too much detail on it. I'm just seeing that we're a little bit behind schedule. Okay. Cool. Oh, here there are also just some in 410 when it comes to public interest entities. Please take note that if you have a public interest entity, and for 2 consecutive years, the total of the audit fees have not been received by the client, then you need to, there's certain actions that you need to take, and you need to contact your engagement quality review division before you can accept the audit. So when there's fees outstanding, there's certain procedures that you need to do. You can't keep performing services for a client that's not paying you. Happiness. Let's take a look at an example. I think that this is a super loaded scenario, but I want us to see if we can identify the issues and then use the appropriate exam technique, right? You're a third-year accountant at We Audit Inc., and you are currently busy with the audit of Company Limited, a listed company on the Johannesburg Stock Exchange. This is the first time that We Audit will be auditing Company Limited, so it's a first-time engagement. Auditor, who's the audit partner, and the finance director of the company, or CASAs. Auditor has informed you that she is longtime friends with the financial director of Company Limited, and Auditor has a 20% shareholding in Company Limited. So this director, this audit partner is also a shareholder of the same company that they're about to audit. We Audit has been preparing financial statements for Company Limited for the past 3 years, which include the year that We Audit has been appointed to audit. We Audit has also prepared deferred tax calculations for Company Limited during these years. The financial director has indicated that he is close to the audit committee members and the audit partner and can easily request you to be removed from the audit team should you not agree with him on any of the issues. The audit fees for this engagement forms 75% of We Audit's revenue, and Company Limited has offered to repaint the building owned by We Audit at no charge, as it was last painted 15 years ago. What you're required to do is to discuss any concerns you might have regarding the SAICA Code of Professional Conduct. Have you guys identified any issues yet?
Yes, I did. I identified this self-review threat because she's got shares and also she's going to be auditing.
Definitely.
Another thing that I have identified is the long-time friendship between the auditor and the company that is being audited. Familiarity threat.
Yeah,
Yes.
that's also a threat. I like how you guys are putting that
There's
there.
also the intimidation one, where they say, sorry, I'm reading from my phone, I've got load sharing.
Yeah, where they say
there's
they
also
can remove you from the audit. Yeah.
Yes, that's the one that I picked up as well.
And
You know what?
I also believe
yeah,
that
go ahead.
I also believe that the long-term friendship is not only familiarity threat, but then the self-interest threat as well.
I like that you're looking at it from more than one side. Great. Okay.
Hello.
What I
Okay.
Oh, okay,
Sorry.
go.
Preparing
No,
the
I-
deferred tax. The deferred tax calculation, self-review threat.
Cool.
Hello.
Yes.
Yes, I just wanted to find out when we answer a question like this, are we not supposed to start with a threat and then we go back to the fundamental principle?
You kept saying that there's something that I also noticed. I noticed you guys are just talking about the threats. So what I want us to take a look at quickly is to go back to what I told you before about what the CPC says, which is that you must identify the threats to these principles and then evaluate whether the threat is at an acceptable level. So I want to see if we can put it together correctly from an exam technique perspective so that we can get the marks right, because I noticed everybody shouting out the threats, but no one is even talking about the principles that are being threatened. And I fear that when it comes to an exam, they're just going to write there's a self-review threat because they are doing the deferred tax calculation and then full stop. Okay, so you're quite right. Thank you for that. If we take a look, when we respond, this is an example of what a suggested solution is. Please bear in mind, guys, that solutions are always just suggested solutions. And so there's no concrete way. You'll find that one is structured in a different way from another one. And that is because it's just a suggestion of how you should provide the solution. As we do these as well, you'll see that there's different ways in which you can word it and present it. So we start, the auditor and the financial director are all CAs, and they should apply the CPC, which includes me, the trainee accountant. What we need to do here is to state the obvious, right? The company is a listed entity and therefore a public interest entity as defined in the CPC. Depending on what the issues are in the scenario, you would get a mark for this. Sometimes if the issues are not specific to listed companies, then you wouldn't get the mark. But I always think it's good exam technique, if it is a listed company, to say that it is a listed company, and so it is a public interest entity as defined, right? Then they tell us that there is a self-interest threat since the audit partner has a close relationship with the financial director as they are longtime friends. This is where it differs from what is in the CPC. The CPC just says that you must identify the threats to the principals, but from an exam technique perspective, you need to state the issue that is causing the threat. So you can't just say that there's a familiarity threat to this principal. You need to explain why this threat exists. This threat exists because the partner has a close relationship with the financial director as they are longtime friends. Then you need to say that this is a familiarity threat. You need to specifically state what the threat is. You also need to specifically state which principle is being threatened. So the auditor's independence / objectivity, you see how it's independence / objectivity because we are dealing specifically with auditors, as they might allow bias or undue influence from the long-time friendship. And then you also need to evaluate the significance. It's not at an acceptable level as the financial director is responsible for the financial statements that we audit will be expressing an opinion on. So the auditor, or auditor being the person in the scenario, should not be the audit partner, which means perhaps a different audit partner should be brought in. And that's a conclusion, right?
Hi, sorry, I have a question.
Yeah.
I usually struggle with the evaluating whether the threat is on a significant level or not. So how do I go about that?
Somebody asked that a little bit earlier. I explained that if you look in the CPC, under all of the issues that they discuss, they actually show you how to evaluate what is acceptable, because evaluating the significance of something is different per scenario.
Okay, I'll take a look at that.
Yeah, so like I said, I had explained a little bit earlier that I would open the CPC and then I would read under the section, and in that section I would look at what the threat is, you know, to which fundamental principle, and then if there are, if you know, what is considered to be significant in that threat, and then whether or not there are any safeguards that can reduce it, because a threat can be significant and then there can be safeguards to reduce it to an acceptable level, and then there you would bring the safeguards in to say, you know, this threat is significant, but if you bring in a different audit partner, you can reduce this threat to an acceptable level.
Oh, okay, thank you.
Okay, may I ask a question?
You can always ask a question.
Can you please, if possible, make an example that will of threats that will not be significant when we evaluate a small scenario, or where the threats will not be significant when we evaluate the threats, so that maybe we can look at it from a practical.
You can have an audit team that is auditing Eskom. I'm picking on Eskom because I'm currently sitting in load shedding. So you can have an audit team that is auditing Eskom, and maybe your first year trainee who is going to audit operating expenses, her cousin is maybe somebody who works at the plant. It's a familiarity threat to objectivity, but I mean, it's not significant. The relationship is quite far away from the audit. The person doesn't work in finance, so they can't impact the financial statements. This first year is auditing OPEX, which has absolutely nothing to do with somebody who's working in plant. So the threat is insignificant.
Thank you.
Cool. Then they
were... Oh, okay. Can I please? Oh, okay, we're still going on. I thought that we were concluding. Never mind, because I was thinking, isn't there more threats? Okay.
It's loaded. There's so many threats. That's what I want us to get through. Like I said, I'm just a bit worried about time. I really want us to get through everything.
Okay, no problem.
Okay, so There was also a self-interest threat since the audit partner has a financial interest in the client due to the 20% shareholding held in company limited, right? So there what we've done is we've stated the issue. The issue is that look, there's this financial interest because they own 20% of the shares in this company. That is causing a self-interest threat to objectivity / independence, right? Because the auditor might be biased towards the investment. Maybe if the company gets a qualified opinion, it's going to impact the value of that 20%. So they will do anything to increase the value of that 20%, or at least to keep the value of the 20% the same. Then you evaluate the significance. This is not significant because 20% is actually significant influence if you trace it back to accounting. If you have 20%, you have an associate. So you've already got significant influence there. Your motivation to misstate or to provide an opinion that is not true is high. And then further, it's also not allowed by the CPC for you to hold shares in a client, right? So on a conclusion basis, the auditor should not be the audit partner and they should not be performing the engagement, or the auditor should dispose of those shares that they have in company limited. Right. So also again, guys, I'm sure you're seeing here that we're not really going into detail with safeguards. Sometimes a question will ask you to provide safeguards, and sometimes it won't ask you to provide safeguards. If they've asked you not to provide safeguards, then don't. And if they do ask for the safeguards, there are safeguards in your handbook, and that's why I say it's very important that when you're doing questions, you're highlighting, you know, like where the hot topics are, which safeguards you're seeing being asked a lot, and that'll help you when you're in the exam to make quick reference to it. I've not seen a lot of questions that ask for safeguards, but when you get to an ITC level, because the mark allocation is quite big, they tend to ask for some safeguards in there. From a CTA perspective, especially because the tests are like 40 marks and stuff, it's small marks. They don't normally ask for safeguards. Maybe in the exam they could ask for safeguards, but usually not so much in the tests. But you should still know them. Please know them. Then there's a self-review threat since we prepared the financial statements. Somebody mentioned that one as well. The same financial statements that are going to be audited. So we need to state the issue. Then we know we've got a self-interest threat to objectivity and independence, and also to professional competence and due care. Remember how I said you can sometimes have a threat that is impacting more than one fundamental principle, and this part of it illustrates that. And then you can also see how you can bring it in. You don't need to write a second paragraph that says there is a self-interest threat to professional competence and due care. You can include it all in one. So this is a nice way from an exam technique perspective to save time and to incorporate your response in a logical and structured manner. So evaluating the significance, it's not at an acceptable level because it's non-compliance with the Companies Act, because the Companies Act prohibits a person who performs bookkeeping services from being the auditor of a company. You see again how there's linking from the Companies Act into the CPC, which also is linking into pre-engagement activities. That's where the practical thinking and the integrated thinking come in. You can't look at things in isolation. You need to look at them holistically, and you need to look at them together. Non-compliance is always significant. So whenever you have an issue with non-compliance, your threat will be not at an acceptable level. Then company limited is a public interest entity, and then the CPC also says you're not allowed to. Remember how I said if you're a public interest entity, the CPC says you can't perform non-assurance services. So we should not accept the engagement, and that is our conclusion. You must conclude. Then there was also the self-interest of the self-review and advocacy threat since we prepared the deferred tax calculations. So from that perspective, we're promoting the position from a tax perspective. So advocacy comes in, which will be part of the financial statements to be audited. And that is to objectivity and independence, as you would be biased to what you prepare. So we've stated the issue, which is our deferred tax calculations. We've stated the threats, which is self-review and advocacy threat to objectivity/independence. This threat is not at an acceptable level since the deferred tax calculation is likely to be material for a listed entity, and also the CPC prohibits calculations. So if it wasn't a listed entity and the deferred tax calculations were being performed, you could also still likely argue that they were, depending on the kind of company that it is. Like, I mean, if it's in the manufacturing industry, they normally have quite big deferred tax calculations, and that can be quite material. But if it's a small little company that, I don't know, sells fruits and vegetables, deferred tax is probably not a big thing. So it's probably not a major thing if you're performing those services for them anyway.
Sorry, ma'am.
Yeah.
What's the big difference between self-review and advocacy? Because I keep seeing them being used together.
Yeah, so if you've performed the deferred tax calculations, remember that is your position. And so let's say, for example, if the position is a favorable one and you land up with a deferred tax asset, you are advocating for your client to receive this thing. And if in the audit, while you're reviewing it, you pick that up, you have a self-review threat because you're most likely not going to say that you've overstated the tax position. But in overstating the tax position, you've advocated for the assets of the company. Remember, a deferred tax asset increases your liquidity and solvency ratios.
Yeah. Thank you.
Cool. To conclude, we should not accept this engagement.
Can I ask something again on advocacy thread?
Yes.
The way I understand advocacy thread is like promoting one's work. So in this instance, can I say that there's a self-review thread, obviously because of reviewing my own work, that I won't even see the mistakes that I've done. And in terms of advocacy, I'm promoting my work that to the extent that I don't even think that there will be errors in what I've done.
Correct. That is also another way to look at it.
Okay, thank you.
Cool. Then they say there's an intimidation threat for the trainee accountant since the financial director has indicated that he will get the audit committee and the audit partner to remove the trainee from the audit should he or she not agree with the financial director's views. Sorry, my pop-ups aren't here. I think I forgot to add them on this one. But that was something that your guys' colleagues raised, the intimidation. So do you see how we've identified the issue, spoken about the threat, and we bring it back to objectivity and independence, as well as integrity, as the trainee might allow this undue influence and may not be straightforward and honest by looking the other way if something is wrong. And then again, this threat is not at an acceptable level because there could be material in the statement that will not be corrected in the financial statements because the trainee won't be straightforward and forthcoming with any issues that they identify. But in this case, there is a safeguard, which is that regular review of the trainee's work should be performed by the audit partner. Remember previously how we said that this person should not be the audit partner, so we would assume in this case it would be a new audit partner who would review the work of the trainee who's been threatened to make sure that the trainee is doing their work properly. And then you also escalate that issue to the audit committee. So those are the safeguards that you would apply in that scenario. Cool. In the same breath, it's also bringing in a self-interest threat from the financial director, who is also a CA, remember, as he might be hiding something in the financials and it threatens his integrity. He's not being straightforward and his professional behavior because it's not good for a CA to be intimidating people. And that will bring the profession into disrepute. The threat is not at an acceptable level because it goes against the director's professional training, which is what we are doing now, and also what you guys do in your audit firms and wherever it is that you're doing articles, if you're doing articles at a bank or whatever, part of your training that you shouldn't be intimidating people and that you should be straightforward and honest. So the director must apologize and recall his statement and allow a conducive environment for the trainee. Seems a very simple safeguard, don't you think? I think maybe a little bit more needs to be done, but I suppose that's a good start. And then the last thing was the free painting that was offered. It can be construed as a gift, and therefore it's also of interest. Yes.
Just before you move on, wouldn't there also be a threat to professional competencies and due care if the trainee does not perform her duty or does not disclose certain things? It means that the financial statement will not be a true reflection of what they're meant to. They will be misleading to their users, right? And obviously, if you know a certain standard says you must disclose certain things, and because of this intimidation threat, you do not do that. So where does the due care and professional competencies come in this instance?
It's not from a lack of competence. The trainee is not overlooking misstatements because they can't see that there's misstatements, right? Which talks to their competence. The trainee is probably very competent, but the problem is they're looking the other way because they've been intimidated. So it's more that they're doing it from an objectivity perspective. They're being biased because they're scared. They are not being straightforward and honest because they're scared. It's not so much about incompetence because they've probably kept up with their trainings and their CPD. Does that make sense?
Oh, okay. Okay.
I mean,
all right. Thanks.
You really could argue it in that direction, but that's not the most obvious one. And when you're answering a question, you need to start with the obvious ones because that's actually where the marks are, because that's what the examiner is trying to see. It shouldn't be something that you need to explain and explain and explain and explain in order to get to the point. And then when you get to the point, it's like, yeah, it's not really
okay. Yeah, thank you. Because I had a question like that. It got me confused. So yeah, thanks a lot.
Okay, cool. The last one was the free painting offered can be construed as a gift and therefore a self-interest threat to objectivity due to the financial gain of the gift involved. The threat is not at an acceptable level as the cost of the building is not, or painting the building is not trivial as specified in the CPC. And also because they haven't painted the building in 15 years. It's probably because it's been too expensive, right? So the gift should not be accepted. Any questions on the CPC?
Hello.
Okay. I just want to find out, so like, if ever they accept the gifts but they disclose, is it still a problem?
No, because then you're not independent in appearance.
Oh, okay.
Sorry, you said, is it still a problem? I was supposed to say yes. I thought you said, is it still allowed? No, because you won't be independent in appearance. You must be independent in mind. So even if you know you've disclosed and all of that, and it's not affecting your objectivity, that's not enough. You also need to look at what it looks like from the outside. So if you're not independent in appearance, then it's still wrong. It's like the wedding example. Okay. We'll move.
Hello. Can I wanted to ask about this answering process.
The what process?
Yeah, like the way we put the framework of like the answering skills. So like according to the conclusions, actually, like when they ask with safeguards, actually the way we are presenting there, so it means our conclusions are actually the safeguards of the issues from the CPC.
Not really, because the safeguard is proposing to reduce this thing to an acceptable level, right? But
Yes.
sometimes it cannot be reduced to an acceptable level. And so the only option you have is to withdraw, not accept, bring, you get what I mean?
Okay, so it means if they're saying
You
actually
can look at your safeguards and your conclusion together, but your conclusion is not necessarily your safeguard.
Okay.
Does that make sense?
Yeah, it does make sense.
Yeah, it's like the Colgate is toothpaste, but Aquafresh is not Colgate argument. Sorry. Okay, then we look at King. So, King, sorry.
Kululek, I just wanted to ask quickly before we wrap up the CPC. I see that you concluded with every thread, like you just went through your normal, identify the thread, and then evaluate, and then you just concluded quickly. Is that how the framework is going to go, where you just, for each little paragraph that you evaluate and whatnot, you just conclude?
Yes.
Oh, okay.
Yeah, unless all of the things that you are evaluating are related, and so they only need one conclusion, then you would only conclude once.
Oh, okay, okay.
Yeah, that's also a good exam technique, to not write the same sentence over and over and over and just write it at the end. Okay, so King 4 is corporate governance. And it talks mainly around the governing body. The governing body is the board of directors. The board of directors reports to the shareholders, and their primary role and responsibility is to steer and to set the strategic direction of a company, to approve policy and planning, to oversee and monitor those policies. Sorry?
I think someone's mic is on.
Can everybody just make me mute?
Oh, one of us is occupied.
Let me see if I
Can you please mute?
Okay, I think everyone is now muted. Okay, can everyone please just make sure that you guys are muted? It disrupts the class. Okay, so the governing body's primary role is to steer and set strategic direction, to approve policy and planning, and then to oversee and monitor those policies and plans, and to also ensure accountability. So King was brought in to help the board of directors to do that as they report to the shareholders in terms of value creation. This actually links very nicely back to probably what Rendani told you in class. If you went through the value creation model, that's where the board of directors fits in, and that's where King would fit in from an auditing perspective. And so sometimes you might be evaluating a business and you're looking at King, but you're not necessarily looking at it from an auditor's perspective. You're just looking at it from a governance perspective. You'll see as you progress in your academics from an ITC perspective, sometimes you can find a question that is just pure governance and strategy. And then a lot of candidates will ask, but governance and strategy is not a module. No, it's not a module, but it's aspects of your modules. And remember how I said, you can't look at auditing in isolation. You can't look at your individual topics in isolation. You've got to see how each module fits into the other modules, and you need to study that accordingly. So don't be surprised when you see integration between the different disciplines. Cool. So King 4 has these parts, significant to your studies. You'll find principles 1 to 4 under leadership, ethics, and corporate citizenship. You'll find strategy, performance, and reporting under principle 5. You'll find governing structures and delegation from principle 6 to 10. Governance functional areas 11 to 15. The governance functional areas are also quite big when it comes to strategy, because that links to what the function of the board of directors is. Then you'll have part 5.5 is your stakeholder relationships, principles 16 to 17. So there are 17 principles, which you should know. You really should know these principles. So you should go into your King, you should study them. I'm not going to go into detail of all the 17 principles, but I will highlight some common ones and how to approach them. Also what you need to look out for when reading the scenario in order to respond to questions. So from principle 1, the board is expected to lead ethically and effectively. So in a scenario, make sure to look out for situations where the directors are not acting with integrity or demonstrating competence or responsibility. There are some good discussion points around non-compliance with King. If it was required from you, so if the required asks you to discuss concerns with King or discuss concerns with corporate governance, this is actually what they're asking you to do. So they're asking you in the scenario to look for where the directors are not being fair, where they're not acting with transparency or competence and integrity, because that means they're in contravention of King because they're not leading ethically and effectively. Make sense? I don't know if the silence means that it doesn't make sense and I must explain it in a different way.
It does.
No,
Thank
very
you.
nice.
It
Very
does
nice.
It makes sense.
Okay, great, thank you. Then we jump from principle 1 to principle 7, the composition of the governing body. That is always a hot topic. The governing body needs to comprise of a balance of skills, knowledge, experience, diversity, independent judgment, and also needs to assist with the balance and effective discharge of its duties. The reason why a board needs to be balanced with relevant knowledge and skills, experience, is because we can't all be CAs and then, kind of say we're all going to sit on the board of directors. We need some legal expertise. We'll need, if it's a construction company, we might need a few engineers on the board who can oversee operations and give input in terms of what needs to happen from an operational level. You also can't have all people on the board being people that work in the day-to-day company, because you need people who can also hold those people accountable. And that's where it comes to having non-executive directors. So your CEO and your CFO, your COO, those are typically executive directors. And then you'll have some non-executive directors. King says most of your non-executive directors need to be independent. So they can't have any relationship with the company. It is automatic that if you are an executive director, you are not independent. And that's why you don't talk about an independent executive director. You only speak about an independent non-executive director. So you need to have a balance of executive directors, non-executive directors, and the majority of those non-executive directors need to be independent. Does that make sense?
Yes.
So not that the majority of the board needs to be independent non-executive directors, it's that the majority of the non-executive directors need to be independent. Cool. Then, yeah. Okay, the CEO and at least one other executive director should be up to the governing body to ensure that there is more than one point of interaction with management. That's where you'll have your CFO. If a company is big enough, there might be a COO as well, as I explained earlier. Then, further to the composition, it needs to promote diversity. You can't have all men on the board of directors. You can't have all females on the board of directors. You need to have a diversity in terms of the membership of your board, in terms of age. They can't all be old people. You should have some young people. They should be diverse in terms of race. Also be careful when you bring things up like that. Maybe if you're reading a scenario and you realize from maybe reading the names of the people who are on the board of directors that they all come from one particular race, be politically correct in how you bring that forward. You can just say, it does not seem that the board of directors is diverse in terms of race. Or if you see that everybody there is a Mrs. or everybody is a Mr., then you say, it does not seem that the board of directors is diverse in terms of gender, instead of saying there are too many men on the board of directors, or there are too many females, or something like that. Everybody happy with the composition of the board?
Yes.
And everybody also understands why the board needs to be that way. Because in terms of creating value, You need to have different opinions. If you have opinions of people that are all the same and everybody who thinks the same and everybody who has the same knowledge and skills, everybody's going to come to the same conclusion, which isn't always the right conclusion, right? Sometimes you need people to challenge you. Cool. Then also when it comes to the composition of the board, in the board of directors, remember how we spoke about the majority of them being independent, non-executive? That board of directors will then be broken. Okay, no, we're not there yet. Sorry. So nomination and election and appointment of members, the board is elected in terms of the Companies Act. So the Companies Act actually sets out the requirements for that. And then in terms of independence and conflicts, board of directors need to disclose any conflicts of interest that they have. That is also a Companies Act requirement, and we'll get to that a bit later. The chair of the governing body should be independent, non-executive. So the chair of the governing body cannot be the CEO. And in the case where you don't have one, you can elect an independent non-executive substitute in the board of directors. Then, okay, yeah, so this is also just what the CEO can and cannot. Yes.
Oh, on the previous slide, when they're talking about lead independent. So if on the scenario they never maybe specified that the board of members does or does not have a lead independent, do you assume that they never appointed it and you point it out as a?
You never make an assumption. You would say it would seem that there is no independent non-executive or whatever. You just say it seems, so it looks like. Whether or not it's true, there's not enough information to conclude.
Can you please
You
come
can even
again?
say there is not enough information to confirm that a lead independent non-executive director has been appointed.
Okay, thank you.
But don't say that there is not one, because unless they've explicitly said that there is not one, you don't know that there is not one. It just looks like one. Okay, then all of the directors have a legal duty to act with independence of mind in the interest of the organization. So they always need to put the organization ahead of their own interests. Then if we take a look at Principle 8, which is committees of the governing body, that means that from the board of directors, let's say our board of directors consists of 16 people. I take those 16 people and then I break them up into subcommittees, and those will be my smaller committees. From those committees, I will have an audit committee. There are also requirements for the audit committee, also because an audit committee must be established from a statutory perspective of a listed client, and that is in the Companies Act. Then it tells you that the chairperson of the audit committee needs to be independent and non-executive, and they need to have some sort of financial literacy skills and knowledge to do that. It also tells you the number of members and stuff, so you can go in there and get the detail of that. I would flag that particularly because sometimes you can find a scenario where they give you the composition of the audit committee, and then you find that the CFO is the chairperson of the audit committee. The CFO is not allowed to be the chairperson of the audit committee. Then you will also need a nominations committee. The nominations committee will be responsible for choosing names of people that should be in the board of directors and appointing members for the board of directors. You'll also have a remuneration committee. In some companies, the nominations committee and the remuneration committee is put together as one function, similar to how the risk committee is put together with an audit committee. Then a social and ethics committee, which is also a requirement of the Companies Act. The Companies Act requires if your PI score is 500 in 2 consecutive years, then you need to have a social and ethics committee. But if you are listed, you have to have a social and ethics committee anyway. And then we would also need to consider stakeholders. So the governing body needs to act in a way that includes all stakeholders. They can't just make decisions without considering the impact of those decisions on the employees, without considering the impact of those decisions on their suppliers, on their customers. They need to think of all stakeholders when they're making decisions. Any questions on team? Okay, according to the roadmap, we're supposed to take a comfort break now. Can we take just a quick 10-minute break and then be back?
Before we take a break, may I ask something? And when we are answering the question regarding King 4, the way we're supposed to structure our solution is supposed to start with by stating the issue and then stating the principle that is not lenient and how the issue or who or can you explain?
So let's say, for example, if you're sitting and the board of directors does not have any independent members, right? You will say
yes.
It is a concern that the board of directors does not have any independent non-executive directors, as this is a contravention of King, which requires the board of directors to have a balance of power.
And it means we do not need to reference what's in terms of principle number 8.
No.
We don't need that.
No.
Okay, thank you.
Okay, is everybody happy that we take a 10-minute break and we come back at 8:40? It is now 8:28.
Yes, please.
Okay.
Yes,
Yeah.
yes.
I feel you guys are drifting away from me. Okay, let's take a 10-minute break. I'll see you guys after the break.